Crude oil prices bounced back from Wednesday's sharp decline after the United Arab Emirates backtracked on comments about OPEC Plus ramping up additional output to plug the gap in exports from Russia. Victoria Ejugwu, an analyst at Vetiva Research, joins me to share her perspective on developments at the oil market. Victoria, thank you for joining us today. Let's get right to it. So many moving parts with what's happening at the oil market, of course, geopolitical tensions. The market held its breath to see if the talks between Ukraine and Russian officials will yield much fruit. But we understand that they haven't made progress in today's talks. But what do you make of how things are unfolding so far, and how do you the impact on the markets, especially with U.S. banning Russian oil?
Thank you for having me. So like you said, geopolitical tensions continue to drive sentiment in the oil market. Even before we saw a formal ban from the US on Russian crude, IOCs already started to pull out and have stayed clear on Russian barrels. So the market has been pricing in premiums for these supply disruptions. For a market that was already tight, that was prices soaring to $100 per barrel levels was inevitable. So in the short term, that might be what we'll continue to see, even if tensions de-escalate. Getting back, these companies getting back into Russia and restarting production might not be as immediate as we think. It might take another 6 months, another 3 months before we see the market start to cool off again.
So if that does happen, if we do see that period where oil prices remain elevated, so at what price do you see oil prices elevated at? We're currently at 116. I know that, of course, it oscillates from day to day, but is there a range you see oil if there is a de-escalation?
If there's a de-escalation, like I said, the market was already tight even before this Russia-Ukraine conflict. We might see prices hover around $80 to $90 per barrel because, like I said, there are still supply constraints that haven't necessarily been overcome. U.S. production hasn't necessarily picked up and hasn't necessarily reacted to high oil prices. So for at least the first half of this year, we might see prices hover around the $80 to $90 per barrel level. That's if the Ukraine-Russian conflict de-escalates.
What are your thoughts on how OPEC but its allies have reacted so far, their response so far? We saw initially the UAE wanting, of course, higher output, but of course has backtracked on that. But what are your thoughts on, the significance of OPEC and its allies at a time like this?
Well, at a time like this typically you would expect OPEC to react and come to the aid of the market. But I think the group is wary of outstretching its members. For one, its African members have struggled to ramp up production. UAE and Saudi Arabia are already producing, using up their spare capacity to meet up with production quotas. So I think what's happening is the group is wary of overstretching its members. And, that might continue to be a priority for them. Other than trying to increase or ramp up production.
At the beginning of the year, before this war suddenly happened, there were demand forecasts, so they were mixed. But OPEC was hopeful with easing of the COVID restrictions, demand would return and things would somewhat return to some form of normalcy. Whatever that means. But how far are we from those forecasts now, with what's happening now?
Well, we're seeing demand prove to be resilient, even with the oncoming of Omicron, even with variants springing up. I think that countries have been more wary to impose travel bans and movement restriction. The global economy is fragile, so we've seen, economic activities uptake, and that has translated into demand for energy. I think what the world missed was what was going to happen post-COVID era. And that's what the oil market is presently dealing with.
What about Nigeria and what the country is dealing with? I believe we have an OPEC quota of 1.7 million barrels per day, which we have unfortunately not been able to meet up with. Just share your thoughts on Nigeria's the Nigerian story. How we've missed out on this rally. Oil prices at this level, but production challenges remain.
Yeah. So like I've been saying, Nigeria has a very big infrastructural problem. So we've been dealing with years of underinvestment in our oil and gas sector. What has happened is during the COVID era, much of these oil-producing fields were shut down, and restarting them isn't necessarily as simple as ABC. So many of the IOCs have struggled with technical and operational issues. Aside that, we've had insecurity, pipeline vandalism. So that has really affected our production as a country. But now what we have seen is, even though we have not been able to meet up with OPEC's quota, the deficit is narrowing. We are gradually getting there. Hopefully, before the end of the year, we'll be able to be close to OPEC production quotas.
Well, fingers crossed on that. And now for OPEC Plus strategy going forward, I know the group has not agreed to individually increase the production outside of its current framework. But what could, I know it's probably a difficult question with, of course, the situation with Ukraine is still developing. And of course, sanctions, we're going to have to wait a while to see just how hard those sanctions are going to hit Russia. And of course, the disruptions we're going to see. But what do you imagine an OPEC strategy would look like as it, as it processes and maneuvers this new environment?
Well, for one, I think that OPEC will continue to stick to a strategy of increasing production monthly by 400,000 barrels per day. Like I stated earlier, the group remains wary of overstretching its members. So that might be what we'll continue to see later into the year. But by Q3, Q4, we should see that OPEC quotas are fully unwound, and then we should see that member countries are producing at pre-COVID levels.